class. So this is Mr. T here again, and we are on one of the most difficult subjects in the Pearson's section, which is management accounting. And we have the expert, Shavita, who again, as I've mentioned before, is a qualified accountant, and she's absolutely superb in terms of answering these questions. So I'm really reliant upon her to give us the answers. And we're looking at P4.
Yes.
Now, just before I start, when I say that we're looking at P4, I mean we're looking at question 4. And the reason why I say P4 is because Pearson's basically state that P1 is question 1, P2 is question 2, P3 is question 3, P4 is question 4, and P5. So I'm relating this P's to the Pearson specification. Okay, so Shavita, down to you.
Thank you for having me, and we are looking at P4 today. And if you look at the question is saying that explain the advantages and disadvantages of different types of planning tools used for budgetary control. And if you break down the question and look for the keywords, we're looking at explain, and explain means again getting into the depth, looking for more detail. And we're looking at the advantages and disadvantages of different planning tools for budgetary control. So first thing we have to understand that what do you mean by budgetary control, and what are the planning tools we are talking about. So once you know the budgetary control, you know the tools, you can give the advantages and disadvantages of each tool. So there are a couple of documents available in the classroom, and we can see that there is this chapter on budgeting and budgetary control. So
Shavita, so I'm going to stop you there, because I just want to break down the question again. You're absolutely right, because the question says explain the advantages and disadvantages of different types of planning tools used for budgetary control. So what Shavita has said is, most people might go into different types of planning tools, but you can't do planning tools until you've gone into the budgetary controls.
Yes.
So the first point of call is to
define budgetary control.
Define budgetary control.
And that will be the first thing we'll be doing.
Excellent.
So if we define budgetary control, in some books, in some articles, in some other approaches to this question, you might see they are talking about financial control as similar to budgetary control. But if you look at the definition of budgetary control, it says budgetary control is when you compare the actual results with the budget results, and then you look for variances, the differences, and you're trying to find the reason for that differences. So if we go down here in this article, it says budgetary control is to be exercised over the budget. The actual results can be monitored against the budget, and the discrepancies between the two can be investigated and corrective actions taken where appropriate. So if we again understand what is budgetary control, it is you got a budget in the beginning, you look at the actual results at the end, you make a comparison, you find the differences, and then you take the corrective measures to remove that differences. That is basically the definition of budgetary control.
Can you just say that one more time?
Yes. So budgetary control, if we define, it says you got a budget and you got the actual results at the end of the year.
Yes.
You compare the budgets to the actual results, you find the differences, which are known as variances, and then you find the corrective measures to remove those variances, that for year onward you will be able to achieve your budgets.
Yes.
So that's what is budgetary control means. But what financial tools we use to do that budgetary control is we use budgets.
Yes.
And we prepare budgets in the beginning of every year. For an example, if you
So I mean, if you really think about it, everyone has a budget.
That's what I was about to say.
Even if we think about the home, everyone has a budget at home.
Absolutely.
You know how much you're going to be spending. You know how much you're
money got.
For the year, and you know what you want to do during the year.
Absolutely.
You know how much you have to spend on insurance, on food per month, on your car per month, on petrol, on road tax. You know how much you've got to spend. If you want to go on holiday, which is going to cost, say, £2,000 in September, then we need to put a certain amount of money aside for that period.
Absolutely, and that was the example I was about to give you, that if you're planning a holiday and you've got £2,000 budget in your hand to spend over the holiday, when you come back from holiday you realized, oh my god, you have spent 2,500. So that extra 500 which you have overspent is known as a variance, because your budget is different to your actual spending. And then you try to look back to your shopping, to your hotel bills, and you find that where you have spent that extra £500. So for that, if you go on the next time holiday, you shouldn't be overspending, because you have already checked the differences and took the corrective measures. And that's what budgetary control is all about, and that's why we have budgets in place. So as we all know, that budget is a financial plan for any business prepared in advance. That's what the definition says here, and we make it in the beginning of every year. So if we look at the document being prepared for this, it says different tools and techniques, and the first one we're looking at are budgets. And it says a budget is a detailed plan of operations of management policy for a given period of time. So you made annual budgets, then you break down in the monthly budgets, you have weekly budgets, and in some company you have daily budgets. So if you look at the hotel industry, just as a service sector, they have a daily occupancy, which is their daily budget, that they have to meet that to meet the overall budget. So on the daily basis they have to check, have they sold all the rooms? If they haven't, why not? What should they do to sell it for the next time, so that they can complete up their budget? And that's what budget is all about. So if we relate budget to budgetary control, we said this is one of the tools that is used for budgetary controls, because to do budgetary control, the first thing you should do is to have budgets.
Yes.
And it is important. So first tool is budgets. There are different types of budgets that are used for budgetary control.
Yes.
For example, zero-based budgeting, flexible budgets, rolling budgets.
Yes.
So to answer your question, you can get into detail of these, you can explain them, and then you look at the advantages and disadvantages of budgets.
So what's a zero budget?
Zero-based budgeting is a kind of budgeting where you always start with a zero, as no initial spending or income from the last year. So it's always start from the beginning as a zero.
Yes.
So it's like having a new budget every time.
Yes, it's a bit like when we spent all the money from the previous month and we got the money for this month left.
So you get in the money, yes, absolutely. So you get in the money and you start budgeting again, and then you spend everything again, and it keeps on going like that.
I think I live on a zero based budget.
Isn't it? Amazing. I live on flexible budgeting, because flexible budgeting is when inflation goes up, incomes goes up, you change the budget accordingly. So you made it annually, but as there is changes in the market, you make changes to the budget as well, and that's flexible budget.
So that's the difference between a woman and a man. A man doesn't use flexible budgets because he doesn't think ahead.
Absolutely. So you can say that way, but it doesn't apply to everybody, isn't it? So, and the final one is the rolling budget, and it's all about that you got something from the last year, you add an extra bit to it, and then you take it to the next year, and then you keep on adding. So it's more related to the inflation side as well. So as inflation goes up, you add an extra bit to the next year, and this is what the rolling budget is all about.
So what type of budget do you like?
Flexible, the best one, which most companies do apply, because when it's flexible, budget is flexible in nature, it's more achievable.
Yes.
Because if it's more rigid,
And the good thing about flexible budgets are that from a management perspective,
yes,
it's flexible, then you can hire the people that you need at
yes,
the right time, even though you may not have the budget for it.
Absolutely.
Because you could adjust the budget later.
Absolutely.
So it's flexible in terms of you meeting your aims and objectives of your department or your function.
Absolutely.
Because the budget is flexible, rather than being too rigid, saying, I can't order those leaflets now for your marketing campaign because the budget isn't there. Or saying, hang on a minute, using a flexible budget, we take some money out later and spend less later and buy this now.
Absolutely. So when you're required to increase or decrease your expenses,
yes,
that's the best one.
Excellent.
And again, if you get into the document, it gives you a clear explanation of the advantages and disadvantages. That's what your question is asking.
Yes.
So advantages and disadvantages of budgets. So if you look at the advantages, it says defining organizational goals.
Yes.
So budget is the final part of when you look at the aims and objectives. You divide your aims into goals into objectives, and to achieve objectives you should have the budgets. Defining individual responsibilities, again, because budgets are in place, every department knows what they got, how much should they spend, and they are bound by their budget. But if it's flexible in nature, there's always a place of changes, but budget gives you at least a guideline to move forward. Providing base, so there are many more, you can look into it.
So just looking at the question again.
Yes.
Explain the advantages and disadvantages of different types of planning tools used for budgetary control.
Yes.
So the first step is to define what
budgetary control is. Yes.
And then the next stage is to look at the different types of budgets.
Planning tools. No, looking at the different types of planning tools. And the first planning tool is budget.
And then the first planning tool is budget.
Yes, and then you talk what is budget, what are the different types of budgets,
yes.
And then you give the advantages and disadvantages of budgets.
Okay, so just to be absolutely clear,
yes.
Thank you for clarifying that.
No problem.
So the first thing is to define what budgetary control is.
Yes.
And then talk about the different types of tools. One of the type of tool for budgetary control is a budget.
Yes.
And then you talk about the different types of budgets.
Yes.
And then the advantages and disadvantages of those different budgets. And again, all the resources are going to be on the online class, which your teacher will allow you to access.
Yes, absolutely. Makes sense. So,
just one point.
Yes.
And the students have to remember, you're giving them all this information. They cannot copy and paste.
No, they can't.
So what must they do?
They can use them as a reference source.
Yes.
So read through it.
Yes.
You can paraphrase these things.
Yes.
You can look for books for the similar things, so it gives you a guidelines to work on it.
And they can read it and put it in their own words.
Yes.
But they must Harvard reference.
Absolutely.
They must
absolutely. So if they look using the same PDFs we are providing them, the information, so they should rephrase it.
Yes.
And then refer it back.
Yes.
Absolutely. So again, if you look at the other importances of budget, it says economic use of resources, because you know what you got and you divide them accordingly. It increases the coordination among the different departments, and it motivates people as well, because you know what you have got to spend as well. So if you look at the disadvantages, again, it says it's based on estimated basis, because it's for future estimations. You don't know will you be able to get what you are planning. So it's like a plan, but you don't know you will be able to achieve it or not. If the budgets are rigid in nature, there's a problem that you will just stick to budget, but you'll not look for new opportunities in the market then. And again, it leads sometimes to the lack of coordination, because there is you can't say a fight, but there is a conflict between the departments, where they say who got the highest budget, who got more money, and all that stuff comes in place. So that's all about budgets.
Yes,
Any questions?
Well, just on that, I remember
Yes.
I worked as a marketing manager for my first company,
Yes.
Metro Products.
Yes.
And to begin with, they gave me a budget of £50,000.
Yes.
But as I was successful,
Yes.
and as the sales took off the product which I was marketing,
Yes.
eventually I had a budget of £1 million.
See?
£1 million, and I had 9 staff underneath me.
Wow.
And I had to do national bus back campaigns, billboard, and I had to monitor it and know what I was doing when, and when the money was going to come out.
Absolutely.
I remember once taking a check to my director, and I had to get him to sign a check for £250,000.
Wow. Amazing.
He said to me, "You do realise I'm signing a check for £250,000? I said, "Yes." But I said, how much money are you going to get from this?
Yes, that's the question, because putting things in place gives you a return later on, isn't it? So yeah, amazing. So that was the first tool we looked at. There's a second tool we're looking at is the break-even analysis.
Excellent break-even analysis.
And if we get into it, first thing we have to understand that why we use it for budgetary control or financial control, and what this tool is all about, before we look at the advantages and disadvantages of it. So break-even analysis is a financial control technique, that's what we are saying, that shows the relationship between the cost and revenue for formulate planning. What they're trying to say here is, if you put break-even analysis in a simple language, this is called no profit, no loss situation. So for example, if you have 2 cars for £50,000 and you sell one of them for £50,000. So after selling one car, you have recovered the cost of 2 cars.
Yes.
So if 2 cars cost £50,000, you sold one for £50,000. So 1 car is your break-even analysis because you have recovered the cost of the 2 cars you have. You still have 1 more car to sell,
yes.
and whenever you sell that car, that whole money is your profit.
Yes.
So your 1 car